So now we come to an end of the series 600 Dynamic Setups 606. About the technical setups, we will go through some examples now that we have prepared. In this example, we have a triple top. We have a triple top on the left side. So you can see this price level is tested 3 times. So it is a very, very weak high. Furthermore, we have a finished auction. Can we zoom in here? Yes, we can zoom in. So you can see we have a finished auction down there, which is very good. So we have a strong low and we have a weak high. So what does this suggest? And we have an upward trend. We have higher highs, higher lows, and then we have a spike to the downside and we have a P shape because we go up and then we create some balance. We have 1 lower close, we have 2 lower closes, we have our first resistance line. And then we have a finished auction, so we most likely will look for a long trade, as all the things that we already know. We're combining, we have a finished auction, we have an uptrend, we have a P shape, so we look for the continuation pattern. And the most favorite continuation pattern is either direct continuation, so we have a direct breakout, or we have a fake out to the bottom and then break in. So we can wait for a break in, an acceptance, and search for long here. But we also have a test of the low volume, of the most extreme low volume, and you can see less and less contracts are traded the more we go to the extreme. So we can also look for a test of the finished auction or low volume area of the finished auction. In this case it is the wick. Search for a long trade here. We can also search for a long trade when we close back inside, but this one candle did not just close back inside, it also closed above the resistance line. So we have a double confirmation of a long, and then we can look for an entry here or just anywhere in that low volume area if we have a low volume area. So when this candle closed, we had a double confirmation because we had a break into the P, as you can see here on the right chart. But most likely this move happened kind of fast. It's a 5-minute candle. Either you were able to scale in here because you saw in the order book, for example, that here a lot of volume was traded. So as soon as we have been in the P shape, there has been traded a lot of volume, and you scaled in here aggressively, or you waited for the candle closure, and then you were looking for a long trade, and you could try to scale in just by a limit on the top of the P formation. But then the question is, where do you put your stop? Yes, the basic rule is always to put stop below the candle, but this is an example for where the risk to reward would be kind of bad because the stop is very wide. So you will check for a different area where you can put your stop loss, and as we told in the previous slides, we put it below the high volume areas. So we broke in the P shape, we had a lot of acceptance, and this high volume area most likely will protect or will be protected again if the price reaches that area again. So if we have a buy limit here, we have a stop here, then we will look for a continuation of price further going up. But now you see that we have P shapes, we have B shapes, and then you can try to check how strong, or to even confirm this pattern that we have more, because furthermore we have a finished auction on the bottom. So we tested the first wick to the downside, first extreme, for first unfair price, or close unfair price, again and again we had a finished auction. What's not as beautiful is that we have kind of high volume here, but that's okay, because the rest all tended to be long and for a continuation to the upside. Let us go through another example on the next slide. So we have different confirmations here. We have a triple top ledge that will be most likely traded through. We have short-term reversal areas because we have a P shape, we have low volume areas, and so on. The big players are missing in that area, so they're missing in those low volume areas because they need more volume, more liquidity to trade, so they will look to get back to the fair value areas, and we have a P formation. And if in the process of this there happens a stop out because maybe you scaled in too aggressive, it's part of the game. It's always about losing and winning, but winning in the end more than losing, and not percentage-wise. You can just be correct 30% of the time, have a big risk to reward, you will still earn money. So, another example, we have a finished auction, which is our first indication that we have a strong high. In general, we are in an uptrend. And if we are in an uptrend, we have one lower close, but we have another higher close, higher close, higher close, higher close. Our first resistance line is over here. This is our first resistance line because we start to create a P shape, we have lower closes, and then we have our first support line. Where is the close? This one is the lowest close, although it is an inside bar. So this is our range, and then we try to break out. Maybe we saw acceptance, we had some volume on the top. Maybe we tried to scale in the limit here long, and then we got stopped out because we put our stop loss maybe below the high volume area. It's okay. First idea was long, we have a stop out, but then we have a break in. We have a breakout, we have a finished auction on top, and then we create an inside bar. And this is another technical setup that we can use, or we implement it into the dynamic setups because it is kind of dynamic. But in this footprint you can see also highlighted in white that is an inside bar. So we have a first sign that there's no real big interest in trading on the very top, because otherwise there will be, or would have been, an unfinished auction. After that we have an inside bar, so we have less price discovery, we are more in the range of the previous candle. And in this inside bar, the trading volume, as you can see here, is very low. So it's in the bottom part of the candle, and it is inside of our range. So the likelihood of us accepting this range is very high, and then we can check or look for short trades. So in this inside bar we have a high volume area. The inside bar closes back inside the range, so we have the first sign of a range acceptance. The volume is low, we have a finished auction on top, and we have this cut, so we cannot see it, but I think we have an unfinished auction down there. It looks like we have an unfinished auction, but doesn't matter. You can look in the chart and then check if there are unfinished auctions to the left. There would be another confirmation. So now we will try to trade a reversal sign and look for entries, and in this case we check for an entry before the high volume area, check for an entry before the high volume area. This happens with inside bars. In general we try to scale in the low volume area we have here, or with inside bars we scale in or try to find a short at the high volume area. And of course, where do we put our stop? It's gonna get repetitive above the high volume area, and in this case also it is above our resistance line. So hope you understand this scenario. Let us continue with another one. Here is a way to see that you can trade a pullback on M1 minute. The first attempt was in a high volume range. So we have a high volume range here. Check what color do I have. Let's take blue. So there's alpha, we have a high volume range here. We have again finished auctions at the top, one finished auction, another finished auction. And it's very likely that we have unfinished auctions at the bottom. And we had a trend continuation, then we had a high volume block, and we look to trade in short below this high volume block because there has been a breakout. The breakout failed. We have formed 1-2 lower closes, P shape here. We broke out, we tested, we failed. We broke back in. We had a lot of volume inside the previous range. So we check to go below the range because this volume mountain is at the break-in, back at the break-in. And then we will try to test this and then trade to the downside, most likely to the low of the range. But as we already told you, the better take profit is at the start of the impulse, which is at least here, very likely this low because this is also a weak low, very likely an unfinished auction here, a ledge. can take profit here and look for this area to trade. And if you have trades like this, you have a very good risk to reward because it's above 4, above 5. If you stop here, of course, sometimes the market will continue and you will get stopped out, but it's part of the game. It's part of the game. So another example, we again have a P shape. So we had kind of illiquid phase here before, a lot of gaps, because it is in the night session. So we don't want to trade stuff like this and count closes here because too illiquid. We want liquidity. So we have the market open here, you can see market spiking, and then we form a P shape. So it looks like we're going to have a very aggressive trending day. In this case, so although we have a P shape and we have, let me switch to blue. Although we have finished auctions on the top, which are kind of a sign of weakness, because we want more action. We want, like here, we want a breakout. We want volumes getting higher, and then we break back in, and then we start to accept or create volume again in the range. I think this is the FDAX, because way less contracts are traded. We can try to trade the break-ins. Maybe we get stopped out, no problem, because on the second attempt, because this is no real attempt, there was no P shape yet, the P shape, so this was the first try. We had a retest, we had a break in, we failed, maybe we traded it to the other side of the range, but in general we had a long context, we had an aggressive opening, we wanted to continue long, and then we have a breakout, and then we have high volumes above the finished auction. So it is not that we trade close to the finished auction, most likely it's a 5-minute chart. Yes, on the right side it's a 5-minute chart, so this one is going to be 5-minute chart as well. We trade close to those areas of the finished auction and we create high volumes, like in this side. You can just take a footprint chart and say when there is 200 or 300% of the average volume traded, you define this as a high volume area. Then we can see there is interest to trade. We can still look for long trades. With a pullback, we'll just scale in with a long limit on pullback to have further confirmation. And where do we put our stop? Always in context. Where's our take profit? We don't know. Maybe there's a naked epoch from the past. We can put our stop very aggressively. We have kind of unfinished auction or double test here, but we have a finished auction here. We can put our stop below this volume area, kind of aggressive. The more passive stop would be below the range, and then continue with a long trade and look for risk to reward of at least 1.5 more than 2. So stop loss then below the volume area. So I think this is the last example, and then you will need to find scenarios like this for yourself and try and exercise and visit and comment and do your journal and try to combine all the stuff you learned in here for or the way you prefer. For example, when you want to swing trade, you want to intraday trade volume or intra-week trade the volume setups. You don't need this if you don't have the time to stare at the footprint chart. You want to start with the basics, add this later, learn the basics, and then add this up. But we still want to tell you the things we are using, so you will learn it. So first, we have a break-in. So again, we have a P shape. Same setup as we had. We have the finished auctions. Those colors. So we had finished auctions on top. Finished auction over there, finished auction over there. Then we had a break-in. But the general context is long. Maybe we tried short here, but it's a very aggressive short. And there is no real volume. So when this candle closes inside the range, there's not big volume. Maybe we could think about shorting here because here some volume is created, and then we can think about shorting there because the volume again shows the acceptance in the balanced area, so in this balanced area. But then we traded to the downside. We had a finished auction and more volume inside of the balance than outside of the balance. So we could also check for a long trade here. But then we continue and then we build volume above here. So this is the alpha move. So this is the more important information that this is the first indication, but the more important information is that we trade higher, to accept the prices, that we have a lot of volume, and then we look for the continuation. Hope you understood some examples so you can implement them and look at the charts. So we have a first entry at the break-in, you have a second entry at the breakout, and in most of the scenarios you have different entries. So you could also check the order book and take this into addition. But now you will need to continue to the proficiency test for the dynamic setups, so we can test you if you understood the things that we told you. And after that you need to go to exercise, exercise, exercise. And now in the following series we'll go to the most important part, which people don't like, but it is that way, is risk management.